财经热点深度解读，大家好，欢迎收看本期的全球财经连线。美国东部时间11月3日，美联储宣布将从11月开始缩减资产购买计划。与此同时，受供应链、通胀等问题影响，美国经济增速有所放缓。美联储主席鲍威尔指出，供应链问题比此前预期的更持久、更严重，但货币政策工具解决不了这一问题。那么，2022年供应链问题是否会延续？美联储会不会加息？美国经济前景如何？我们现在就来连线野村美国高级经济学家 Robert Dent， 听听他的观点。Hello, Robert. Thanks for joining us. So let's begin. The Fed announced that they will begin tapering in November. How do you think about the Fed's decision?
So look, I think the Fed's tapering decision was very well telegraphed ahead of time. They told us going into this meeting that this was likely going to be the policy outcome. They announced that they would do a very steady and predictable pace of tapering at a pace of 15 billion per month, meaning that the taper process itself will last until mid-June of 2022. And so from our perspective, this was a policy that they really laid out quite clearly beforehand and was not much of a surprise given how well it was communicated before the meeting.
Is it too late to taper?
I think at this point, it's very good timing for the Fed to begin tapering. They laid out very clear guidance on what conditions needed to be met for them to begin reducing the pace of asset purchases. Those two conditions were substantial further progress on employment and prices. I think if you look at the recovery of the US economy over the past couple of months, we've clearly met those criteria. The labor market is doing quite well. The unemployment rate has dropped below 5% in the latest employment report. And the price component for their mandate is clearly met as well, given the very elevated inflation readings that we've seen over the past couple of months. And so, I don't know if we would say that it's too late to taper. I think from our perspective, this is the right timing, given the guidance that they had laid out for their conditions previously.
Is it a surprise you that the Fed began to taper in November instead of December?
We had expected a mid-November implementation. The way that the Fed's tapering process works is that they release updated purchase schedules for Treasury and MBS purchases in the middle of each month. Given the FOMC meeting took place at the beginning of November, it made sense to us that they would make the first adjustment in the middle of November, roughly 2 weeks after the meeting takes place. Otherwise, they would have to wait about 6 weeks until the adjustment in mid-December, which to us felt like a bit of a long window.
The Fed didn't mention when they will begin to raise rates. What's your predictions?
That's a great question. So Powell was pretty clear that he does not have a set time frame yet for when the Fed will first begin to raise rates following the COVID recession. At this point, we think it's most likely the Fed will first raise rates in December of 2022, so roughly 12 months from now. At that point, we believe they will judge that maximum employment has been reached. We expect the unemployment rate to be around 3.6% at that point. And we think inflation will have come back down, but remain close to their 2% target. And so those are very clear conditions, I think, where the Fed will be prepared to first raise rates.
How many times will the Fed raise rates next year?
Our view is that next year they will only raise rates once, so a 25 basis point hike in December of next year at the very end of the year. Following that first rate hike, we are expecting 2 rate hikes per year. Each rate hike will be 25 basis points until they reach a terminal rate of 2 to 2.25%.
The PCE price index rose to 4.4% in September. It's higher than August. Why did the inflation remain high?
So there are a lot of factors contributing to high inflation in the US right now. I think the single most important one is what's happening to supply chains and supply bottlenecks. The impact of restarting supply chains after shutting them down due to the pandemic has been larger than I think we and many forecasters assumed. Those impacts are lasting longer than people expected just a couple of months ago. And so what you're seeing is consistently elevated inflation readings. We actually think core inflation in the US is likely to accelerate further in Q4. We think used vehicle prices will be a big part of that story. And so we are expecting core PCE inflation, the Fed's preferred metric, to rise to about 5% over the next couple of months before decelerating to close to 2% by the end of 2022 as these supply chain bottlenecks gradually unwind.
Will the supply chain issue continue next year?
We think at this point that the supply chain disruptions are likely to last at least until early 2022. It's taking quite a bit longer for them to be unwound than people anticipated, particularly for the supply chain for things like durable goods, which is extremely complex. And so our view is that demand for goods in the US is going to remain quite strong for the rest of this year, putting additional pressure on supply chains. But as that wanes in 2022, we should see those supply chain disruptions start to improve starting around Q2 of next year.
The wages and the salaries are rising continuously. How will such a situation affect the inflation?
So we just got the Q3 employment cost index reading on Friday last week. It did show the largest quarter-over-quarter increase in wages and salaries since the 1980s. And so worker shortages in the US are absolutely adding upward pressure on wage inflation as firms are willing to pay more for new entrants and continuously employed workers. So far, we have not seen a material spillover to inflation from higher wages. We think what's going on is largely just related to a bit of a longer time frame for when people are going to be returning to the labor force after dropping out during COVID. As those supply bottlenecks for the labor market begin to unwind, we think that wage growth will eventually moderate in 2022. And as of right now, we do not envision it infecting prices. That being said, I think it is a very significant risk that if high wage growth does eventually start to spill over into higher prices, that is something the Fed could feel the need to respond to a little bit earlier. And that could be something that pulls forward liftoff ahead of our December 2022 expectation.
The US GDP grew only 2% in the third quarter. What happened for the US economy?
So we think Q3 real GDP growth was significantly impacted primarily by what's going on in the auto sector. If you think about the deceleration in real GDP growth from around 7% in Q2 to around 2% in Q3, almost all of that we think was driven by what happened with autos. So auto supply chains remain severely under stress because of just the number of different parts that are required to assemble vehicles. That's affected how quickly production in the US can ramp up, which has actually limited consumer sales and resulted in pretty significant inventory drawdowns. And so what we saw in Q3 was just the impact of these auto supply chain disruptions really come to the forefront during the quarter. That being said, I think it's worth emphasizing that one of the problems right now is that underlying demand remains very, very strong, and that's contributing to some of the inventory drawdown and the inflationary pressure. So we do not think that the deceleration in Q3 GDP growth represents a material weakening in the economic outlook.
Will stagflation become possible?
So at this point, we do not think the risk of stagflation is particularly high. So as we've discussed, underlying demand in the economic outlook for the US right now is so strong that you're really not seeing a situation where stagflation would be such a concern. A stagflation environment is one where you're seeing weak demand and very high inflation. We have the high inflation component right now, but we think actually what's contributing to that high inflation is very, very strong demand for goods in the US, which is putting upward pressure on durable goods prices in particular. And so you're seeing high inflation and strong demand, which isn't necessarily what we would expect if we were looking for a stagflation scenario.
But we see the energy prices are rising rapidly. How do you think about that?
Energy prices specifically, I think, are rising globally. There are a lot of energy shortages, particularly in Europe. In the US, retail gasoline prices have risen quite a bit over the past couple of months. in line with the increases in crude oil prices. Right now, we think the Fed is willing to look through inflation related to energy and food in particular. They tend to focus on measures of core inflation that strip out those volatile prices. The only caveat we would add to that is that if these rising prices for energy eventually begin to fill in for consumer inflation expectations, that's something the Fed might feel the need to respond to if those inflation expectations actually move higher.
What will happen if stagflation appears?
If stagflation really does appear and demand does weaken significantly more than what the Fed is looking for, and inflation remains persistently elevated, I think the Fed would still feel the need to tighten policy just to make sure that inflation does not become a self-fulfilling prophecy or something that remains persistently elevated over a couple of years. They learned from the 1980s that in that situation, you really need to tighten policy to make sure you get inflation under control. So again, right now, we don't see that as a major risk, but I think the Fed has a pretty clear playbook for how to address that if it does become a problem.
What's your predictions of the US economy in the fourth quarter?
So in Q4, we are looking for a pretty robust increase in real GDP. We think real GDP growth is going to rebound to around 5%. As the impact of the Delta variant fades on US consumer activity, we think the recovery in service spending is likely to accelerate, and consumer spending on durable goods remains quite strong. And so we expect growth to accelerate pretty meaningfully. Now, we also do expect inflation to accelerate. We think core CPI inflation is likely to rise again on a month-over-month basis to as much as 0.8% month-over-month. So this is a very elevated reading. We think a lot of that is coming from used vehicle prices in particular, which continue to be affected by these supply chain disruptions for autos. And so what you're looking at is a very high growth, high inflation environment, but also an environment where we think the labor market is likely to be doing very well. So we expect the unemployment rate to decline further during Q4. We think it will decline as much as a couple of tenths of a percent to around 4.3 or 4.5% by the end of the year. And so we think job growth should accelerate pretty meaningfully, which is going to help keep the Fed on track for raising rates next year.
Finally, I want to talk about Jeremy Powell. How do you comment on his job in his first term?
So I think Powell has done a great job in his first term. I think he's had to navigate an extremely difficult set of circumstances with the pandemic. I think he's done a great job in terms of kind of navigating all the different tools that the Fed has access to, lowering short-term interest rates very quickly, ramping up asset purchases, and deploying a number of different credit facilities. This was really an unprecedented shock for the US economy, and I think he deserves a significant amount of credit for ensuring that the damage was not larger in terms of the economic impact. In addition to that, Powell has been at the forefront of the Fed's strategy review, where they kind of re-embraced very strong labor markets. This took place in 2019. And I think he's helped shape the Fed's thinking around maximum employment and labor markets in a really significant way as well. And so I think his job so far has been great. And he enjoys very strong relationships with members of Congress in the US and has worked to make sure that the Fed's efforts on transparency and communication have continued to improve over the past couple of years.
Will he have a second term?
So at this point, we do think that Powell is likely to be reappointed by President Biden. Powell enjoys relatively widespread bipartisan support in Congress. As I just mentioned, I think the view in the US is that he's done quite a good job in managing the Fed's response to the pandemic. And so we do think that Biden is likely at this point to renominate Powell for a second term. There is a little bit of uncertainty around that just because of some discontent from progressives in Congress who might favor a different Fed chair. In addition, the Fed is grappling right now with an ongoing investigation into senior officials' trading activity in 2020, but we don't think that either of those things are going to be enough to derail Powell's likely second term.
Are there any other candidates?
So in addition to Powell, another candidate that is talked about in the press is Governor Brainerd. She has been on the board for a number of years and is somebody that I think Democrats might view favorably as a potential alternative pick if Powell is not the choice for Fed chair. Brainerd has been a little bit more dovish in the past, and so she might favor a typically maybe longer path to maximum employment, maybe a little bit of a later liftoff date compared to Powell. But to be completely honest, I think their views between Brainerd and Powell are pretty similar. And so it's not completely clear that the Fed under Brainerd would be all that different from the Fed under Powell.
When will the Fed go back to normal policy?
It's probably going to be a couple of years. We think they won't start raising rates until December of next year. If they only raise rates 2 times per year thereafter, they probably won't reach neutral until 2025 or 2026 in terms of the nominal neutral rate. In addition to that, it's going to take them time to figure out how to normalize the balance sheet. During the COVID pandemic, they bought an enormous amount of assets. And their balance sheet today is much larger than it was going into the pandemic recession. And so they're going to have a conversation about whether they want to reduce the size of their balance sheet. We ultimately think that conversation is a year or 2 away at this point. And so, that's also something that's going to take quite some time for them to normalize.
All right. Thanks, Robert. See you next time.
Thank you.
缩债只是美联储政策正常化的第一步，通胀、供应链、充分就业等问题前景还不明朗，我们仍需更多的时间来判断美联储政策何时能步入正轨。此外，我们需要关注下一任美联储主席的人选。以上就是本期全球财经连线的全部内容，感谢收看，我们下期再见。